Hello, friends,
Welcome to the Liberation Chronicles. I'm Robin Parker.
and I'm Jorge Zeballos. This is another episode of the Liberation Chronicles, a series in which we hope to give voice to liberation in our current historical context and discuss what it means to build a truly inclusive society. Today, we have a special guest, Dr. Bob Williams, who will help us discuss his recent book, Funding White Supremacy, Federal Wealth Policies, and the Racial Wealth Gap. Bob, it's nice to have you, my friend. I had the fortune, because of my friendship with Bob, to actually hear the genesis of the book before he even started writing, and I appreciate the acknowledgement of whatever very tiny, small contribution I may have made to your thinking around this, Bob. Uh, but we, as always, welcome your comments about our episode, and we hope that you like the video and subscribe to our channel.
Super, Jorge. By way of background about our guests, Bob Williams is the Sulon Bib Stedman Professor of Economics at Guilford College. In each of his classes, he encourages students to adopt the key conceptual models and apply them to their own research projects. He also encourages them to consider the role of class, race, gender, and systems of power as they examine their topics of interest. He is the author of Funding White Supremacy, which we will discuss today.
So, Bob, I think your book is very timely in many ways. Obviously, for those of us that have been in the movement to create greater equity in our society, a book like this becomes really useful in just giving us additional information that we can use to engage in conversations to make the argument about why racial equity is important in our society. I as I started reading the book, it didn't take you long, Bob, to just uh, begin to throw some bombs in there that immediately shake you up. Right? So I wanted to share with with our viewers just a couple of pieces of information that really stood out to me immediately as I started reading the book. So one of the things that you mentioned early on, within the first few pages, you say that according to the Federal Reserve, U.S. household wealth reached 142 trillion in 2021, and I think you even said like in a very quiet way. So most of us didn't notice, didn't hear that that's what happened, but it did, right? And it's a major sort of milestone in terms of wealth accumulation in the country. So 142 trillion, the total of U.S. household wealth in 2020. And then you go on to say the number of households in 2021 was 131 million. Combining the two figures, we can reach the conclusion that if we were to distribute that across households, each household's wealth will exceed $1 million. Now, again, what what would be of this country, right, if that distribution of wealth actually existed? It's just my mind, which is blown just with that initial statistic.
Well, I think that it's one of the places in the book where I'm incredibly optimistic. And I let the reader, I encourage the reader to think about it as you have. It's interesting when I share it with my students, they're all thinking, you mean I get $1 million? And I say, well, not really. What I think it means is that people at your age would be coming to adulthood with little or no debt, with the opportunity to have completed college or to get some kind of licensure in some kind of craft occupation. You would have the means to be able to get a decent livelihood. Over time, you would be able to benefit from the structures that are in place to help people build wealth if you have wealth. And that by the time you got to be my age, you would then have a really nice nest egg that would allow you to retire comfortably, that if you had kids would allow you to provide for them in terms of a multitude of their needs. You would allow them, you would be able to offer them sort of a healthy start in their lives. And then, I mean, we go from there where it would just create so many possibilities. One of the ones that I go to immediately is all of the dirty and low paying jobs.
Mm.
All of them would go away, not the dirty jobs, but the dirty and low paying jobs, because you would no longer have people in desperate poverty who would have to take those jobs. And then those jobs would then they're still many of them are unpleasant and dangerous, but because of that, they would actually pay more for that. And so then you can just go off in so many other directions in terms of where things could go.
Right. Well, the other thing that it made me think about, Bob, and obviously, most of your book, I think, leads us to this, right? To this conclusion that ultimately, if the distribution of wealth doesn't look like that, it's a choice. It's not just simply a foregone conclusion of a system that just spits out that result just because of the way things are. It's not a natural distribution, in other words, right?
Absolutely.
So, and we'll definitely dig more into the idea of what choices have we made that led us to this place, right? So that's so much of what you shared. The other sort of number that I wanted to share with our audience is this. The average household wealth in 2021 was certainly not the median household wealth, which was actually $167,000 overall. And here's the cover of Bob's book, and here's the chart that I'm referencing at this moment. So the median household wealth was $167,000 overall, and only $24,520 for Black families. That means that in Black household, wealth was only a small fraction of what white households had. And here's the graphic that depicts that huge gap that exists. The household wealth for white, Black, and Latinx families from 1963 to 2022. That's what this graph is showing. So you actually see, that wealth gap actually growing over time, which I think it's interesting because in many ways, I think it also begins to challenge the premise that I think many of us may have about the idea that things get better over time, right? Things are improving over time. I think most people kind of will probably hold that as yeah, that's the way it is. And statistically, we can demonstrate that is not the case. As a matter of fact, is the opposite. Is the opposite, unfortunately, right? So again, just these two pieces of information and the visual of the graphic for me, I many other folks again that are also maybe more visual learners, that when you look at information that way, it is just undeniable that we have a system that is deeply inequitable. And again, the idea that it has grown over time, which then should lead us to think about what are we doing that is leading to this point, right? So anyway, that's information that we wanted to share. Again, I think for Robin and I, both of us, as we talked before, this episode, these are statistical pieces of information that begin to really create a huge moment of dissonance with the reality that we're facing, and brings up a lot of questions about, so what now? Where do we go? What do we do? And understanding what happened that we got here. So I'm curious, Bob, and I know you and I have talked about this, but I'm curious for our audience. Was exploring the racial gap that we just documented the reason you wrote the book?
Yeah, I mean, that you stole my thunder, because that's exactly what the reason. Because I want to just add to it the time frame that we're looking at. So 1963 is basically still Jim Crow in this country.
Mm-hmm.
So we are looking at what has happened to the wealth gap over the civil rights and what we might call the post-civil rights era. The era that was supposedly different in terms of racial relationships in this country. So before 1963, bad stuff was happening. We all regret it, but things have changed. We got that behind us, and we've presumably moved on, right? And changes have happened, and all good things, we have become more equal. Absolutely not. That's the narrative, right? And of course, what that graphic shows is exactly the reason for why I wrote this book, because it is people think that as you said, everything has gotten better. And what has happened is, on the one hand, you can say that is true. Everyone's gotten better, but it's gotten better much more for white people than it has for Black and Latinx and other folks, other communities. So it's I think that is just incredibly striking. I know that one of the things I talk about in the book is that there are people who have done some polling, and they ask people, what's your sense of the wealth gap? And the reaction is, well, it was bad in the past, but it's now, Black households have about $90 for every $100 that white households hold. So it's almost equal.
Right.
Well, it's absolutely not the case. So again, it is the narrative is so different than what the evidence shows.
Yeah. One thing that, and you kind of addressed this also at the beginning of the book, but I think it's an interesting conversation to have up front before we dig into the details of the book. Why did you use the term white supremacy? As you acknowledge in the book, right? Very provocative, particularly in this moment, right? It's like, we're banning certain words from our vocabulary, and yet you actually went in the opposite direction and said, this is actually white supremacy, people, and get used to it. So, just curious to see, Bob, what was your thought process that landed you in the place of, like, you know what, I'm going to call it that?
Well, first of all, the decision was made 2 years ago between me and my editor. So I think it didn't seem quite so provocative back then, right?
Right.
But of course, there are a couple of reasons. One is that one of the characters of the book, Fernefeld Simmons, who actually is from North Carolina, and he is actually he's a senator, and he uses the term white supremacy quite easily back 100 years ago, and without any kind of so this term is obviously something that people were comfortable with, and it has only been, I think, in the last couple of generations that has sort of become more sort of less sort of, it's not the kind of thing you talk about in Good Company, right? Is it sort of, it's talking about the KKK and we're not really sure we want to talk about them, that kind of thing. So that's the other reason. But then finally, the real reason is that I think the conversation about white supremacy is simply this. It's making visible what is.
Bob, I wanted to ask you some questions about the racial wealth gap. But before I do that, one of the things that struck me about your book was how you emphasize the importance of talking about household wealth, not just income. You explain to our audience what the difference is and why the difference is important?
Yeah. Obviously, the differences are blurred between income and wealth, and they're off, and it's because they're really interconnected. But I think that there's a particular moment of time in all of our lives where the difference between the two became pretty stark. And that was about 5 years ago when the COVID shutdown happened. So now just think about what happened. All of a sudden, overnight, people were furloughed from their jobs. Their salary and wage income is gone. Businesses are shuttered. They're told to shut down. All of a sudden, all of their income is gone. People who make a living from going, doing speakers, different venues, sports, all that sort of live entertainment, in-person entertainment, shut down. All of that income gone. Many of the rest of us were insulated from this, but for many of us, all of a sudden, we realized how undependable income can be. So then at that point, people are then saying, what do I do? And if you have savings, which is the wealth, that's things that you own, they're yours. You have choices. And the more savings you have, the more choices you have. And those people who didn't have any savings, their choices are totally different. That is the stark reality of having wealth versus not having wealth. So then what wealth really represents is power. You can do things with it. If an opportunity comes up, you can take that opportunity for new training. You can send your kids to the best schools. You can pass it on from one generation to the next, which you can't do with income. So it is a vehicle by which we can structure society in ways where it's all stratified. And so to me, it is the perfect vehicle by which a system of stratification can perpetuate itself generation after generation after generation, like we see in this country.
Thank you for that. You talk about the racial wealth gap in your book as being deeply rooted in U.S. history. And you also use the term stratification economics and the wealth privilege model and malign neglect, not benign neglect, but malign neglect. Could you talk for our audience about what do you mean when you say that racial wealth gap that we've been talking about is deeply rooted in U.S. history, and how do the terms stratification economics, wealth privilege model, and malign neglect fit into perpetuating that gap?
Well, to answer the first part, how it's deeply rooted, when English colonists, settlers came to this country, they quickly realized that the wealth that they were seeing was really embedded in the land. And so the first thing they had to do was there were people on the land and they had to have them removed forcibly. And in many cases, exterminated. So this is the genocide of Native Americans in this country. and that's the history. It's we want the land that they have, so we have to remove them. That's the first piece. Then the second piece is to really get the wealth out of the land, you're going to have to work hard. And this is where having cheap labor was the second key. And that's where the sort of the source and the origins of the chattel slave system. And so both of them now create, a system of which Native Americans we want to disappear as white settlers, and Africans we want to bring here as cheap labor in terms of then over time they become actually a source of wealth themselves because they become reproductive capital. And so again, this is the system that starts even before our country is formed in 1789. So this is going on for 2 centuries, and so it's already embedded.
Mm-hmm. And what about stratification economics and the wealth privilege model? How is that related to the racial wealth gap?
So stratification economics basically says, well, let me back up. Conventional economics basically has the sort of narrative that we have a meritocracy. And so then when you look at things from that point of view, and then you look at, why are things so out of balance? Why is the distribution so odd? And so then they wrestle with trying to come up with this and that answer, and none of it's satisfactory. Stratification economics says, the system is set in place to create a stratified set of opportunities, that there's going to be some folks who are going to have all of the opportunities available to them, but that means that other folks are going to have no opportunities or few opportunities. And so we have a system where you're either in the haves or the have-nots. And then the question is, how do you structure all that? How do you then keep it? How do you then work it so that it becomes self-perpetuating? So that's the key of stratification economics. It's arguing that the system is set up to create this, maldistribution of wealth. That's exactly what it's trying to do.
And the wealth privilege model, how does that fit in to stratification economics?
So the wealth privilege model is that if you look at how people accumulate wealth, it's people either save it out of their current income. They're able to take some of those savings and put it into assets that appreciate over time. Like you buy a home and that hopefully will appreciate over time, or you put money in the stock market, either in our retirement accounts or whatever else, and hopefully that appreciates over time. You don't have to do anything in those cases. You can all you have to do is be patient, right? There's no special effort that's being done there, but you still get to earn it. The third way is through family transfers, inheritance and gifts. And that can be more than just money. That can also be help with going to college. It could be parents co-signing loans. There's a myriad of things that really entails. So it's broader than what we sort of think of. And then that's the traditional way. And what my book also talks about is there's the fourth way, and that's the federal government. And the federal government this is part of what they've been doing since 1789. Having said all that, then what happens is that all of these systems that are in place, the banking system, the insurance system, everything, the financial system, they're all in place so as you build wealth, it gets easier and easier and easier to build more wealth. Okay. And so this is perfect. The people at the top get the freest ride. The people at the bottom may get some help, and the people at the very bottom get absolutely no help. At that point, the wealth privilege model, it actually works against them. And so you have to have some sort of threshold of wealth to begin to even start to be able to benefit from these things. And so that's how the wealth privilege model works with stratification. And then because race is because of the racial wealth divide, then it then crosses into in terms of the racial stratification.
And finally, and this will be the last term that I ask you about, you talk about malign neglect. How does that fit in?
So malign neglect comes from the term of benign neglect, where Daniel Patrick Moynihan, in about 1970, so this is right after much of the civil rights legislation is happening. This is also after the urban protests that are going on throughout much of the country, where Black Americans in particular are sort of outraged that there are not any changes, any even modest changes in response to some of the civil rights victories. The Kerner Commission is out, and there's some evidence now that Black incomes in particular are starting to rise and starting to catch up. And so what Moynihan is talking about is, he says, we can just now relax. And I think, if I'm going to give him credit, I think he believed at that point, as I think many people did, with Jim Crow torn down, that the American economy and this notion of a meritocracy, that of course incomes and wealth are going to begin to narrow, and that the problem will sort of solve itself. So basically what he was saying was, we don't have to do anything more, and things will just, it's going to go towards a more benevolent equilibrium. Okay, so that was the thinking. So
Gotcha.
the concept of malign neglect is the recognition that we really know that that's not happening. We certainly know it now. And the idea that we do not address it directly, effectively, intentionally, is now malign neglect without a question.
I know that this is perhaps more a psychological, or just as much as psychological as an economic question, but one of the things that struck me in your book and your comments here was, despite the economic facts, white people think that the wealth gap is much smaller than it actually is by several factors. Do you have any theories about why people think that way?
Yeah. Okay. As a white man, right?
Mm-hmm.
We're nice people, right? We don't want to be thinking that we are somehow, it's easier for us to think about how stuff was done to people of color in the past. And so our sense of who we are is tied up in that. So I think that's the first piece. The second piece, I think, really also comes down to, I think that white people that have trouble hearing my book and the message of my book, it's because their self perception of themselves is tied up in, I got here and I earned it. And I earned it because I worked hard. I saved, I was disciplined, and I have sort of savvy financial literacy. And it's sort of, I have smarts. And I think that what my thinking is, that's all true, or that can be all true, and in some or all cases, but also there is this other piece of, we've all been supported, and we all have been right. And so the metaphor that I always think about is the walking escalator at the airports, right? And it's sort of like, why am I walking so much faster than everybody else? Even they're young people, I'm walking faster than them. And, again, I'm not aware of what's going on, right? I'm just looking at, I'm walking faster, and they're all exerting themselves. They look tired. And so I think part of it is that sense of, not wanting to acknowledge how much I have benefited from the system at once, and how and that then says that then sort of, how do I deal with that in terms of my own self-image?
There are narratives that inform the decisions that are made at an economic level, right? So one of the passages in your book, again, early on, you talk about, and I don't remember the name of this individual, but you talk about this individual that is one of the economic advisors, maybe to a presidential administration, and they just finished looking at some data that shows some of these inequities. And when he's asked about, so what do you think could be done? Immediately he goes, well, folks just need to buy less coffee maybe, and they can save some of that money, right? It's like, you just have information fresh off the oven, right? That tells you it's a systemic issue, and yet the narrative takes hold of where you go with what's needed to change this dynamic. And so,
yeah, I mean, I think that you're referring to Jack Lew, who was Obama's Treasury Secretary.
There you go.
I think on most days gets it, but he certainly didn't there.
Right.
And yeah, I mean, so he's talking about it's all about the individual, right? As opposed to, no, it's all about the institutions. Okay. And so one of the ways that, that I think about that is, just how we save. 20 to 25% of the population don't bank. They don't have a relationship with a bank or credit union. And the reason why they don't is because they're not welcome there. Banks make money mostly. Well, let me say this. Banks make money from me on whether I save with them or not. And of course, they want me to save, because the more I save, the more I'll put in their bank, which they can then use and loan out and make money. They're using my money to make money. Mm-hmm. Well, people with no wealth, they don't have savings. And so the way that the banks make money from them is through debts and fees, right? Mm-hmm. And so many people then realize that this institution's not for me. It's not working for my interest. And so about a quarter of the population remains unbanked. So then the question is, what does a bank do for me in addition to save? Well, I don't have to get cash at work and then carry it home. I don't think young people this age know what burning a hole in your pocket means, what it even refers to, right? Because the money is just electrons going from the employer to my bank.
Right.
I can distribute it into, my checking account, which is spendable, and my savings account, which is, no, I try not to touch that. They share with me bill alerts. I can do all my billing online, so I won't have any late fees. I mean, so the whole notion that I'm doing something special to save is just utterly ridiculous. Okay? That's one level. Mm-hmm. The other level is, how do I save? It's not by not buying coffee and keeping to a budget and winning the argument with my spouse that we got to spend less, right? I think many of us have been in those arguments where we're trying to somehow save something at the end of the year. The way I saved was I was involved with a generous employer-sponsored retirement plan, mm-hmm. where they matched, they gave me a generous match. I never even saw the money. It got put into an account. I just designated that account to be in the stock market. I didn't do anything special. And every year it just continues to grow. That's how I save, not through this, this notion that I didn't buy a cup of coffee. And then the other way that I save is when you buy a home. and you pay a monthly mortgage. And instead of paying rent, you're now beginning to pay down the loan, and you're building equity in the house. Again, it's a coercive savings mechanism that I actually benefit from. So this notion that it has something to do with the individual is just absurd. And I could go on with all other institutions. If I borrow money, who's going to get the better interest rate? Myself, who doesn't need a low interest rate, or somebody who's desperate for a loan?
Mm.
So again, it just it's it's just not, again, this narrative about the individual, and
Right.
that the reason why, and this is what economists do, the reason why we do have the racial wealth gap is because Black people in particular, there are cultural differences in how they view risk, in how they save, conspicuous consumption, all this kind of stuff, in terms of, that's why we have this racial wealth gap. And it's actually pretty disgusting stuff.
Right. Right. Yes. And so again, what I find interesting is that, beyond the economics that we can analyze and understand why these things exist, it's also bolstered by a very entrenched narrative about, as you said, behaviors and decisions and sort of cultural sort of aspects of that actually keep white folks from understanding how they got to where they got. And then the other story can actually take hold and feel like that's an accurate description of what we had to do over the years to get to where we are now. I don't know if you remember, Bob, but when I was still working at Guilford College, as part of my department, we brought one of the members of the DeWolf family, the largest slave trading family in the history of the United States, right? And I remember showing the documentary that the family had made, Traces of the Trade. And in that documentary, there's a moment in which the family members are around a table having a discussion about how they built their wealth and how they ended up where they ended up, each of them. And I remember one of them actually said, yeah, I understand that, a lot of our money came from that thing, but that's already been washed off. There's a way to trace the dollars that came specifically from the slave trade that all of a sudden, they stopped showing up in our bank account. Right? It's, again, a very sort of safe intellectual way of saying, that did not benefit me at all. So there's a lot of that kind of helps white folks keep in a place of denial, if you will.
Right.
I also wonder, you mentioned in your book that there are, quote unquote, hidden parts of the federal tax code, Bob, that unfairly benefit white people. Could you talk about some of those?
You bet. So there are, first of all, the federal tax code runs tens of thousands of pages long. So absolutely nobody reads it except for tax attorneys who are looking for special, loopholes. Buried within those tens of thousands of pages are 170 some odd tax deductions. And these tax deductions, they do all sorts of things. Some of them are familiar, like the mortgage interest deduction, capital gains exclusion, many people have heard of, and those sorts of things. So the way the tax deductions work is very different than how normal government appropriations work. And so what I talk about is, so in terms of you can use policies, either say you could wanted to encourage home ownership. One policy you could do is say, we're going to give a matching grant to first-time home buyers when they buy a new home. And that would be a direct appropriation. Another way would be the mortgage interest deduction. And that's another way that we supposedly encourage home ownership. So the difference is the matching grant, there's an actual check that's written. I can follow the paper trail, who got it. But Congress can set a limit on how much we're going to spend on this program. And when the funds run out, they run out. And we'll have to wait till next year's appropriation. All of those things allow for transparency, budgetary oversight. It allows for the GAO or some other institution to actually say, are these funds working? Are they having the effect that we want them to have? So that's on the front door of the Treasury.
Mhm.
And what I say is, we've got guards there. I want to now go to the back door. And the back door to the Treasury is where the tax collections come in. But all of these tax deductions, what they do is they siphon off some of the money that's going into that back stream, the tax collections. And there's nobody there checking on who's getting it. So the mortgage interest deduction depends on, if I buy a new home and take out a mortgage, I then I'm paying mortgage interest, and then I start taking the deduction. And that's how it works. And so there's nobody that's keeping track of it. There's nobody, there's absolutely no transparency. It is totally stealth. The other piece of it is an entitlement. If I'm paying mortgage interest on my primary residence, I am entitled to this deduction. And then with many of these deductions, there's no cap.
Mm.
So now I want to focus on, and what I do in the book is I don't try to deal with all 170. I focus on 12. And the 12 are the largest. They are also all designed to meet the needs of people who already have wealth. So, for example, 3 of them meet the needs of people who are homeowners: the mortgage interest deduction, the home sales exclusion, and then there's a third one in terms of not having to pay anything in terms of being able to benefit from home ownership. So those 3. Renters, nothing for you there. 2 others, the pension and the life insurance, they help people who are saving for retirement, which is a good thing. But people who are saving for a rainy day fund, who are just trying to scrape something together in case, the next time an appliance or their car breaks down, they get no help. So all of these are tied and meet the circumstances of people who have already achieved wealth. That's how they do it. And then, of course, because white people hold most of the assets, we hold most of the businesses, we have most of the retirement assets. We are then the natural beneficiaries of these tax deductions. So I'm able to estimate that about 85% of all of these 12 tax deductions go to white people. And that's probably about 20 points above what their share of the survey population is. So this 20% is just the sort of the extra. And then the last piece I want to say about it, these 12 tax deductions in 2025 will generate $1.2 trillion of benefits to households. Now, that number is the kind that gets your eyes to glaze over, right? What's 1.2 trillion? Well, 1.2 trillion is pretty much what the Social Security benefits, all of them, that are going to be dispersed in 2025. So we're talking about a program that rivals Social Security. It also is a little bit larger than all of the Medicare expenses that are dispersed in 2025. So it's larger than Medicare. These are the 2 largest government programs. Nobody's paying attention to it. I didn't use this term in the book, but I now use it. This is stealth tax policy.
Mm.
This is under the radar. No one is paying attention to this. And it's not just, it's not a one-time thing. It's not the lottery. This is every year, and it's growing. So in 2022, that meant that white households got about $900 billion from these tax deductions. That is twice what they reported that they got from family, and inheritances, which is probably a little underreported. Okay. I mean, people don't always remember all of the money they got from Uncle Fred or whoever, right? But still, it's twice.
Mm.
It's just the magnitude is just shocking. Yeah, I mean, I think that one of the things that I argue about how whether these past policies affected today or not is I have a redlining map for the city of Greensboro.
Mhm.
And so what I will do is I have one of those ready, and I just hand it out and tell people what the color coding means, right? And then just sort of ask them, well, what do they know about where, what's circumstances on Northwest versus Southeast Greensboro? And so it's really clear that what was, the map that was done 190 years ago is still playing out today. And so that to me is just, and that's not even the wealth that you're talking about. That's just a policy decision, right?
Yeah.
So that's, I think that, you know, I mean, I think that it's really important. I think there's another side narrative that I also think is important. So at this time when the redlining is happening, and basically Black Americans are shut out of any kind of help in terms of home ownership. From about 1945 to 1960, they expand their home ownership rates by 15%. It's utterly amazing.
Mhm.
And I think that really goes to show the incredible persistence, the discipline, the sort of financial restraint and literacy of that community. And of course, it's twice as hard for half as much, right? And so, so they were able to expand the home ownership rates. Unfortunately, it didn't have the same payoff in terms of appreciation, because again, of that the resale of homes did not increase like they did in the white neighborhoods. So they achieved this incredible threshold, but again, it doesn't have the same payoff. And it just, to me, just shows how the barriers are just sort of endless, which gets to your point of a simple set aside program is not going to even begin to cover it.
Right.
Bob, could you talk a little bit about, I know that our audience will certainly understand what redlining is, outlining where people of color live in a neighborhood and rating it as unfavorable.
Right.
Right. So what was the economic policy reason, the so-called, economic policy reason for doing so? I assume that the federal government had some reason that they thought that it was really important to let the rest of the population know where the good areas were and the bad areas were. Is that the idea?
Partly it was. I mean, so what happened was all of this was in response to a similar housing collapse to what we saw in 2009. Very similar. People could not pay their mortgages. And so what happened was that the federal government came in and said, okay, we are going to guarantee these mortgages. So if there's a default, we will pay for it. And that was the way to get the banks to begin to loan money again. So then the question is, what about the taxpayer who's now on the hook for all this if the defaults continue? So they then decided that they would go through and try to figure out what they could tell in terms of what would be where mortgages were likely to be repaid and where they were not. Okay, which all of that makes sense. The problem is that there was a perception of the people who were now orchestrating this, their belief that any kind of mixing of races undeniably cause property values to fall. That was the assumption.
Mhm.
So then so if you're worried about, you know, trying to prevent defaults, the last thing you want is property values to fall. Okay. And so that was the rationale. There was no evidence that this would happen. And in fact, even after, obviously what happened was that people did move around, and people did move, across borders and move into new neighborhoods. And in itself, that didn't cause property values to fall. And in fact, economic theory would suggest it wouldn't cause property values to fall as more people want to buy into a neighborhood. Now, there were instances where people use race fears to then generate blockbusting and things like that, where they actually went through and sort of manipulated people and said, this is what's going to happen, as if, bringing up people's worst nightmares. And then people decided to sell in mass. That then causes property values to fall. And then the developers were able to make money off it. So that's the reason. It was really a couple of individuals who really had these very, they were actually very scientific ideas about how property values would fall if people of different races lived together.
Mm-hmm.
And it just, that was that they were able to get that into the policy. And then that's just part of the narrative that was in people believed.
And it becomes a self-fulfilling prophecy.
Yes, it does.
Right? It's like, well, if we get too many people of color or any people of color in this neighborhood, property values go down. People go, ooh, there are people of color in this neighborhood, so it must be a bad one. I'm going to look elsewhere, and the property value, or I'm going to leave, and the property values go down.
Yeah.
Yeah.
And we can see that idea is so entrenched that it continues to show up today.
Mm-hmm.
There's a certain percentage of people of color move into a neighborhood that will trigger the response of white folks to flee that neighborhood.
Right.
In New Jersey, for example, where we have a kind of home rule around schooling, it has a direct impact on schools. New Jersey schools are highly segregated because New Jersey towns are segregated as well. And so you have concentrations of poverty in just a handful of districts, and those districts have what a study at Rutgers University called apartheid.
Right.
Because of the way people were pulled apart because of economic policies that had to do with housing.
Yeah, it happened in my neighborhood in Greensboro. And this was about 25 years ago, where we were going through redistricting. And it was where do what schools will our kids go to, our neighborhood. And we had people in the neighbors who were saying we ought to be able to do this in a way in which we are going to sort of really sort of try to undo as much as we can the level of residential segregation and its imposition on the schools. And then we had other people, and these were all liberals, right? Mm-hmm. We're not, and there were other people saying, no, that's my property value. This is my house is my most important asset, and I'm worried that if our kids are going to a different school, that's going to then affect my property value. And there is still a rift between people. I have neighbors who have been here for 30 years, and there's still a rift that's left over from that trauma. It's it's deep. It's just really deep.
Yeah. So, we're beginning to wind down now our time together, and it's been a real pleasure having this conversation with you, Bob. One of the things that that I have learned to do through work that I do with a great organization, the Groundwater Institute, that I know you're aware of, Bob. One of the things that we say in our sessions is diagnosis determines treatment, right? And clearly, the diagnosis about the racial problem in the United States has been completely off base for the most part, which then leads to a treatment that doesn't address the root causes of the problem. Right? And we just talked a little bit about how some perceptions continue to perpetuate themselves. So this is your moment, Bob. Your opportunity to get us out of this mess, my friend. So how do we end malign neglect? What do you propose that we do to undo the effects of malign neglect?
I think two things probably, and I'll probably have more than that as I think about it. But I think the first thing is this. What I argue is what's happening is that we had roughly 2 centuries of where racially preferential treatments policies were done either overtly or covertly on the basis of race.
Mm-hmm.
Okay. So, that's the Homestead Acts, that's the GI Bill, either overt or covert.
Mm-hmm.
The Civil Rights Act basically said, no, you can't do that.
Mm-hmm.
So now what I'm arguing is that what we have is that we design policies based on wealth. And I would argue that that means it changes, instead of for whites only, it says for wealth only, and that basically gets at the same thing. Okay.
Mm-hmm.
So the first set of policies is to flip that on its head. Okay. And that would be to create wealth, accumulating wealth supporting policies that are targeting not the people who already have the wealth, but the people at the bottom.
Mm-hmm.
Okay. So the first thing would be Pell Grants. And to me, the Pell Grant program is an exceptional program in terms of sort of policy design, in that it did that. It basically said, we're going to try to figure out, we're going to target the help to those who have the greatest need, because we recognize that the importance of a college education in terms of being able to achieve some level of financial security, and that should be available as widely as possible in our prosperous society.
Mm-hmm.
So the first thing would be to make the Pell Grant an entitlement, to at least double it. And there are legislation before Congress to do all this, and to really sort of make it so that it really does lower the barrier to a college education. And that's easily achievable.
Mm-hmm.
So that would be the first thing. The second piece would be something similar, would be baby bonds. And this is policy that was Sandy Darity at Duke, and others have promoted. Cory Booker has a bill every year that he submits. And what a baby bonds would be is this: it would be every child born in America would then get a savings account, and the government would deposit, say, $1,000, and that those deposits would increase every year. The amount of the deposit would be inversely related to the household income of the child. So by the time that they reach majority age, they could have as much as $50,000 or $60,000 under the Booker plan.
Mm-hmm.
There would be restrictions. So they could use that money to pay tuition. They could use that money to start a business. They could use that money to put into a retirement account. Are the norm, or to start a business, I think that's, or buy a house. And so it would be, that they would use it to invest in some way in themselves. So that would then have a major impact. And again, that would sort of get at what I was, the idea that people could start off with a certain amount of wealth that would then allow them to access the wealth privilege model and all those benefits. As important as those policies are, they ain't gonna solve it. Mm-hmm. And so it really then you have to look at some sort of reparations policy.
Oh, the R word.
Yes.
Oh no. Yes. Oh no.
And and again, reparations, as it's currently talked about, is only for blacks, right? In terms of those who can sort of demonstrate that they're descendants of enslaved people. So again, it offers a substantial redress, but not a full redress. I'm not even talking about other groups, right? Who have obviously important claim and credible claims. So, but that again, that would be something that again, if we really were going to be to deal with this, because again, I argue that the racial gap is based on the wealth gap, and there is no way that you can eliminate. I think that we can really sort of eliminate racial disparities and get rid of our racial stratification until we basically deal with wealth disparities. And that is also a tough one, okay? Because I've not done this work, but I have colleagues who have done this work in terms of if we did a reparations policy, how do you make sure it doesn't end up back in white hands? And that's a real concern, okay? How do we know that it's, if kids are able to go to Harvard, then Harvard benefits from the policy. And then there's corporations, right? So again, it's the issue of how to really constitute a reparations policy that really is effective. And most of the thoughtful work I've seen is that there is some payment to individuals' households, but then there's also a significant investment in institutions that are supporting those groups that have been marginalized, right? So like investing in HBCUs would be one example, or Hispanic serving institutions and things like that. So again, and then other kinds of financial institutions that might have some of the same relationships with those communities. So it's not an easy thing. You have to. The finance nor the actual how you disperse it. But I don't see how we get past how we get beyond this without doing something like that.
One final question. One of the counter arguments that people make is that, if we did these things to help people who are relatively poor, if we did things like give reparations to Black people, if we help people who are working class, the economy will crash, the quote unquote hardworking middle class people will suffer, all of those things. I have a feeling that you would argue that wouldn't be the case, and that in fact, we would be looking at a more robust economy for everyone. Is that true?
Yeah, yes, it is. Obviously, I think there's two things. One is, I want to say, I think whenever you're looking at a broad swath of people, you're going to find, folks who are brilliant and folks who are not, right? And so obviously if you just gave some people some money, some people would use it quite well. Other people might squander it. I want to say this. I think my community squanders it unbelievably.
No.
So I think that when I think about all of the advantages we have had, and it actually surprises me that, for example, if the wealth gap wasn't larger in 1963 than the evidence shows. and there's a lot of evidence to show that, inheritance, people treat it sort of like the lottery, and very few lottery winners end up in really much better position than they were before.
Mm.
And so part of it is that I think it's, whatever worries you could have about one community, they're already happening in the other communities, right? So that part, I would just, I wouldn't be very persuasive. But I do think that, I think that if we have any sense that any kind of sort of meritocracy has some benefits, right? Then I think the idea that we would tend to really equalize things and make sure that everybody really has an opportunity to thrive and sort of reach their full potential. I don't think there's any question that we would have such a much better, much more vibrant, much more creative, richer society than by letting Elon Musk become a trillionaire. This whole notion that we need to, let some people get really rich so that they're going to come up with these great ideas that we're all going to benefit from. It's just BS.
Right.
So yes, I think to me, it's in some sense, it would be returning to a sense of what I think that America has sort of always, at least the aspirational part, has stood for.
Thank you.
Thank you.
All right, Bob. I think you're off the hook. I think you came up with some good ideas.
Well, I really enjoyed this. This was fun.
Thank you. Appreciate it.
Can we do this next Friday?
Well, listen, I think it happens every time that we have a conversation with a guest or guests that we always feel like our conversations are incomplete, right? That there's so much more that we could go into. So there might be a part 2, Bob.
All right. I look forward to it.
And we might call that one Defund White Supremacy. But we appreciate your time, Bob. I appreciate the book. Certainly, we encourage all of our listeners, viewers to get the book. You're going to find it very useful, particularly from the sense of so much of what has been written is about what has happened, and you talk about what needs to happen and what is happening now, right? So it kind of stretches, I think, our ability to talk about the effects of white supremacy in our society, not just as a historical reference, but as a lived common day reality. So again, we appreciate your time, Bob. And to all of our listeners and viewers, again, follow us, please, like and subscribe, and give us some comments about the episode and also some ideas about future topics that you might want us to discuss. We look forward to seeing you again next time. Thank you for being here.
Thanks, everyone.